Good evening, everyone, and welcome to this session in our series Expert Hour, a series of masterclasses. This is a masterclass in FinTech, and we're very happy to have you here with us. Um, Before we begin, a few housekeeping instructions. To avoid any distractions, your camera and your audio are muted by us. You can have enhanced audio quality if you use headphones, so do consider that option. We will have time for Q&A after the main presentation, so do think about what questions you want to ask. This is a really great opportunity to ask an expert your questions about the field or the program and so forth. So do keep your questions ready, and then you can type them into the chat box in the Q&A segment. And please keep your questions relevant to the session. And there will be links and some useful information posted in the chat box periodically at the start and at the end of the session. Um, Points of contact, email addresses, social media handles, and so on. So do look out for these as well in the chat box. Now, before we begin, I'd also like to introduce Education USA to you. Education USA is a network that's supported by the US Department of State, that's part of the US government. And as a US government network, it is your official source on US higher education. There are over 430 centers in over 175 countries. And the aim is to provide accurate, comprehensive, and current information to students. In India, specifically, EdUSA India is a US mission supported platform that advances US leadership in higher education, research, and innovation. We are a team based in New Delhi with one advisor in Mumbai. So we run several sessions like these. There are the series of masterclasses. There are sports themed sessions, sessions with alumni, and also sessions about state educational ecosystems. And this program of sessions is developing as we move forward. So we do encourage you to stay in touch with us if you're interested in sessions like these. You can scan the QR code here. You can follow us on social media. In most cases, our handle is at Education USA India. We have an Education USA India website as well that you can visit for more information and also for useful resources. And now moving on to the agenda for today. We will have two sections to the session. The main section is a tutorial on the building blocks and the kind of foundational concepts of FinTech. We'll also have a brief glimpse of research and opportunities in the field in the United States. And in the last 10 minutes, we will have time for Q&A. And I'd like to now introduce our speaker to you. We're really privileged to have Professor Robert Kieschnick with us. Professor Kieschnick has a very rich and varied career and background, and I'm not going to get into all the details of it. You can look up his profile pages on the Naveen Jindal School of Management website. But I will say that we'll give you a few details. Professor Kieschnick has his master's and PhD from the University of Texas, Austin. And his career has really a wide range, including industry, government, and academia. So that's a very interesting background that he brings to his field. He returned to the University of Texas, Dallas in 1996 and has been teaching there since then. And since 2005, he has been Associate Professor of Finance and Managerial Economics at the Naveen Jindal School of Management. But more significantly for our purposes today, he is Director of the Masters, the MS, in Financial Technology and Analytics and he's also the director of the Center for Finance Strategy and Innovation. So we're really privileged to have Professor Kishnik with us today to conduct the session. And Professor, over to you. Welcome and thank you for spending your morning with us.
Good. Thank you so much. Okay, let me share my screen. Hopefully, everybody sees this.
We can
So what
see
I
it.
want to talk, excuse me?
We can see it. Yeah.
Okay, good. So what I want to talk about today is what is FinTech, because it's really a broad area. And as you can imagine, the term is really just short for financial technology and points to the use of technology in providing financial services. However, fintech is not really a new field, though there's a lot of hype more recently about it. FinTech is old. This is a Morse code in the telegraph were early examples of technology that combined electronic hardware, the telegraph system, and the software, the Morse code, to provide financial services. And actually, that evolved over time into what were ticker tapes. You may have heard about ticker tapes where people will talk about stock prices going over a ticker. The combination of electronic communication and software has been something that's been a feature of finance for many years, and it just keeps evolving. And with that in mind, what we see over time is it's become more intertwined with digital technologies such as networks, computers, computer programs. And so, in that sense, it's evolved from the ticker tape to now the internet, which has become really the medium over which many financial services are now being provided. And so, a lot of people think of fintech, they think of really internet or network digital technologies. However, it's a lot broader than that, as you'll see as we go through the discussion. Now, I'm just going to touch on this topic because it gets a lot of attention. Um, Data management in financial services is kind of its own area that overlays everything that it's done. So traditional banks store data on their customers and their accounts, and this could be in data files like structured data files, SQL files and the like on their own company-owned servers, or it could be on a cloud service provided by Amazon or Google or Microsoft. But the point of this is they control the data. So it's not so much that they have the data stored on one system or one server, it's rather that they control the data access. And I mention that because then a variation of this is distributed ledgers where the data may be stored on different servers, and yet the company or the entity who's collecting the data controls access to that data. Um, what's evolved in the last decade or more has been blockchain. Now, blockchains are really just a distributed ledger that stores data in blocks secured by cryptographic techniques. And so there's been a lot of attention paid to blockchain and blockchain technology. It's evolved. There's over 2,000 or more blockchain platforms in existence. There was a paper just yesterday. I was talking to a colleague about the survival rate. So over the last 10 years, there's been 20,000 platforms. Most of those don't survive more than a year or two because they don't get enough interest in them. So there's still a lot of churn in terms of blockchain and blockchain technology as people are trying to solve different problems. But it's important to understand that at the root, it is a database technology. Now, I'm not going to go in great depth about blockchain because, as I just indicated, there's so many different types of platforms that address how they are structured, how they validate data, et cetera, in different ways. And that's not really critical for what we want to focus on today. However, I would suggest these two YouTube videos for those of you who may have little to no background in blockchain, as they're fairly instructive. The first one is by Anders Bauerth. Um, he's created a series of YouTube videos to try and explain blockchains and how they operate. The second video is a longer version of some of what he's been doing to try and educate people on kind of how blockchains operate. So if you're interested, I would just simply suggest you go to these websites, look at them because I think they do a better job of visually communicating what a blockchain is, how it operates, and you can understand then kind of the concept of tokens, which are given to validators of data on these blockchains. And that, in the form of cryptocurrency, which are just tokens. As you may know already, Bitcoin, the first major blockchain that used tokens, um, their token is Bitcoin. It's called a cryptocurrency, but it's also effectively a token. And we'll come back to that point a little bit later. Uh, Now, there are really two different ways to approach FinTech. One is through a technological lens and to focus on the different types of technology used to provide financial services. So we could talk about networks, computers, machine learning, cloud computing, blockchains, and the like. And that's all fine, well, and good. But as you can tell from my starting example, technology in finance has evolved over more than a century. So from telegraph all the way to today and will continue. So the technologies used in finance keep changing. But what tends to be more stable is what are the services that FinTech is trying to provide. And so we're going to focus more on the financial services because that's a more stable way of thinking about FinTech. The technologies that are used to provide those services is something that will continue to evolve. In fact, we're right now in the midst of, and I'll talk about this a little bit later, a revolution in international payments. So payments is probably the one silo, and I'll call these silos, FinTech, that focuses on kind of to transfer payments from one party to another. And my guess is all of you have used digital transfer software where you're transferring currency from one account to another. In the States, this would be like Zillow and other similar platforms. You may have an Apple product, then Apple has digital wallets that stores information on your credit cards and the like. There's something similar on other platforms as well. There's cryptocurrency. As I mentioned a moment ago, Bitcoin is basically a token provided to validators of transactions on their network. Ether is what is given to validators of transactions on the Ethereum network and so on. These tokens or cryptocurrencies are then traded. And one of the things that has evolved, as you may know, is that now countries are considering developing their own cryptocurrency. It's also the case that we now have what are called stable coins, which are just tokens that are backed by fiat currency or some um, asset like gold. So in the States, there are a number of stable coins that are backed by US dollars. One of my former students has a company that is providing stable coins to banks and credit unions. Um, so that's evolving because it's easier to move payments around using stable coins, since the value is more stable than kind of Bitcoin has shown to be. And then there's account to account payments. So these are just transfers. This comes from customers to business, which are called C to B, or B to C, business to customers, or B to B, which are business to business. I'll just mention that in this space, um, B2B is probably the area that is going through the most rapid change. C to B and B to C has evolved quite a bit, and so there's less opportunities for new endeavors in that space than in the B2B space. Um, there's consolidation going on. So the company to illustrate payments is Stripe. Stripe is a global company that provides payment processing software and APIs for websites and mobile apps. So yeah, there are other companies like Stripe. They basically allow a website. So let's say you have a website that sells, oh, I don't know, flowers or books or whatever, clothes, and it needs a way of processing payments, then Stripe is what is providing the infrastructure for the payments. It's interesting to note that as of yesterday, Stripe made a offer to buy PayPal. Uh, and so we're going to see how that plays out. But the point of that is we're starting to see a consolidation of payment processing in the C to B and B to C space. Um, Another silo or vertical is banking. So we're seeing an evolution of banking. There's banking as a service. So these are basically companies that will provide APIs to non-banks so they can provide banking-like services. So it's kind of like I'm operating a bank and I'm providing the back end and the services for another company that, while not a bank and it doesn't have a corporate charter to be operating as a bank, it can provide many of the same services of a bank. Then there's neobanks. These are entities or banking entities, that is, entities that have a charter, a banking charter that operates solely online. A good example of this used to be Capital One. Capital One keeps going back and forth on kind of its business model, but effectively, it is a bank that operates just solely online. And then there's advanced core systems. There's just a lot of work going on right now. There's at least two companies that we've worked with. One just came, I talked to them last week, Quantum Six. It's a British company. They're locating in Dallas, an office, and they focus mainly on trying to help existing banks improve their core systems. Um, an example of kind of the banking as a service is Fizzly. This is an API-driven platform providing a variety of banking-like services. Oh, by the way, on each of these slides, I'm going to give you one example. There's just a whole lot. there's really in each of these verticals, there's a lot of different companies providing similar services. So I'm just giving you one example. I don't want you to think it's the only or it's even the major example. But it gives you a way of going and looking at some of these companies and seeing what they do. Embedded finance is another vertical. This is actually one that's growing rapidly. Um, it is where basically loans are being provided to customers or deferred payment. Um, it used to be, and again, this is an illustration how tech techniques change over time. It used to be called layaway. So you used to Sears, for example, was a company that would sell you a washing machine and it would allow you to pay for the washing machine over a period of time. Um, so there's a lot of examples of these kinds of delayed payment or where you're being effectively financed by the provider of these delayed payments. Now we're seeing this now embedded in retail sites. Um, it can also provide embedded insurance. We'll talk a little bit more about that a little bit later. Um, One of the faculty I have teaching in my program is a senior vice president with Citi. His last project was developing a embedded or a buy now pay later system for motorcycles of all things. So basically, somebody would come to a dealer. They would say, "Oh, I'm interested in buying a motorcycle or that particular brand." They then would go to a computer within the vendor. They would enter information, and Citi would make a decision about whether to provide financing for that deal. If they did, then they would pay the vendor. The customer would walk out with a motorcycle and then make payments to Citi for the financing. Um, I gave you an example here of OpenPay. It provides flexible payment terms for customers in certain markets, which are important in most countries, car repair, healthcare, and the like. So banks are getting into this. As I mentioned, my colleague at Citi is definitely doing more of this. Bank of America is also becoming more involved in. So the banks are beginning to see this as a profitable opportunity. And so we're seeing a lot more of this. Now it has its problems, and we'll come back to this a little bit later. LendTech is just a variation of buy now, pay later in some sense because it involves lending, but it's different in that you are basically either going to a website or a platform and kind of peer-to-peer lending, like Peerform is an example here, where you might go, you may say that I need a certain amount of money to buy something or to pay for education. We'll talk about education loans in a minute. Um, and there you would post your needs. People would bid on those. This has all kinds of variations. I used to give my kids money at Christmas to allow them to invest in microfinancing, something you may know about, since a lot of that got started in Bangladesh and then has expanded past there. Um, and they can look at small companies wanting to raise funding and they can decide, oh, I'll contribute certain amounts. Um, Now, on peer-to-peer lending platforms, there's a payment that is arranged for. So it's not just contribution to supporting some endeavor like microfinancing, it's more traditional lending. Um, There's AI power credit scoring. So there's a company in Fort Worth, for example, that provides loans to students. Students go to their website, they enter information about their background and the like. They then request funding. The vendor then works with the university that the student wants to go to and may provide funding based on its credit scoring, which uses a lot of information about the student. Um, and they buy actually information from marketing vendors. And this is an example. There are companies, at least in the States and I know in India, that collect a lot of data on people. So there are marketing data vendors that have in the States data on almost 300 million US citizens. And they'll have like 15 to 20,000 fields in these databases based on scraping data through all kinds of sites. And that's being used to make decisions on loans. Um, Wealth management is another vertical. Um, and you may be familiar with these kinds of sites. They're robo-advising sites, they're digital brokers. Um, Now, I'm going to separate those a little bit from quant strategies because those tend to be used by professional investment organizations. Did robo-advisors, as exampled here, Wealthfront, um, will collect information on you, your risk profile, your goals, and then recommend kind of an investment strategy. They will help you manage your money. They'll help you transfer money in on a regular basis. They may also provide you with some loans. So they're trying to evolve into a full service financial service front. Again, this is solely on the web. So we interact with this company and its services through access to a web portal. Um, Same with digital brokers, algorithmic trading engines. There's a variety of those. So I have a student, for example, that has an algorithmic trading platform he developed, which uses textual information along with numerical information to make judgments on investments. In fact, one of my colleagues started a fund in Canada, and I think now they have about 1 to 2 billion in funds under management, which is doing something similar. So you're seeing a lot of these trading sites. Either they're trading on at a very high frequency, or they're trading based on using a larger information set than is typical. Capital structure infrastructure is another silo. Now you're familiar probably with exchanges, like the New York Stock Exchange or NASDAQ, or GlobeX is an example of a internet-based exchange for the trading of future contracts. They provide settlement and clearing services, market data. So the New York Stock Exchange, for example, or NASDAQ sells their trading information. So that's one source of revenue for them. Here in Dallas, we have the Deposit Trust Clearing Corporation. It provides clearing services for multiple platforms like the New York, NASDAQ, and whatnot. It's probably one of the largest financial institutions in the world, but you wouldn't hear about them because they are all focused on kind of the infrastructure of capital markets. They're also leading the way in the development of the Cantor Network, which is a blockchain platform that is kind of a permissioned platform that is being studied by several financial institutions as a way of trading um, across borders. I'll come back to this. So this is one of the areas where we're seeing a lot of development. Um, but there are other vendors in this space. Again, you don't see these, but they're critically important because they are what make the market work. And they may be data providers like FactSet or the like. InsurTech, this is one that's evolving. Um, so in 2 weeks, we're doing a conference on campus for InsurTech. So we're bringing insurance companies involved in this space and fintechs. Um, this is an evolving area that's growing rapidly. Um, Part of it is using alternative data to make risk assessments and to decide on loans. Part of it is using AI to make underwriting decisions. It may be IoT claims, Internet of Things. That's actually a big area. Internet of Things is where devices communicate information to a blockchain. I had a student group a couple of years ago that developed an IoT blockchain for coffee. So basically, coffee that's shipped from Central America to the States, uh, 40% is lost due to humidity or in the ship. So one of the things that the students did is they did a test run and they put a device in different pallets of coffee. So they put these devices to measure humidity, and they would then monitor that. They would give information to the ship. Oh, you need to move that pallet because the moisture content. As a result of this, by the time it arrived to port in the San Francisco Bay Area, they had lost less coffee than was typical, so that was a huge savings. The students sold their technology to Nestle, uh, and so this was an example of an IoT. We're seeing a lot of that in insurance. You see it in cars and car insurance. You also see it in things you might not think about. This is not exactly an IoT, but it's an Oracle. So several years ago, I was asked to evaluate a business proposal. So what the company wanted to do was provide insurance to farmers in India. And the idea was that the critical factor affecting their crop yields was rain and heat. And so the idea was to save these insurance or smart contracts on a blockchain. And then the blockchain would read information on kind of current weather conditions. And under certain conditions, it would decide, oh, we haven't seen enough rain. It's been too hot. This we need to pay on this contract because the farmers will suffer a loss. And so it was all automatic. It was a good example of how blockchains are working with external information to provide, um, in this case, insurance coverage. The company I mentioned here, Lemonade, this is strictly an online insurance company, provides insurance for autos, renters, pets, houses. It's expanding its portfolio. They've struggled a bit, but they are continuing to grow, and there are going to be other companies doing the same or similar things. As I mentioned, because you have the ability to use AI to help in underwriting, we'll see more of these kinds of insurance contracts or insurance companies, which is like the neobanks. So, like neobanks, these insurance companies strictly operate online. PropTech is another area. PropTech we're seeing grow a lot. So I also sponsor our undergrad FinTech club. So last year they focused on PropTech. And so we had a major company, CBRE, that is a major commercial real estate company sponsor, and they developed different apps for managing property. The example here of LCAI is a property management service that uses AI and other tools. Again, this is where IoT comes into play because it will use information about electricity use, heating and cooling to make adjustments. But it's more than that. It's digital platforms that provide mortgage loans. So this is more like peer-to-peer lending. There's automated property valuation. There are companies like Zillow in the States and others that are giving you online information. So they're using data to value property so you can go and see what you think your house might be worth. They're also being used in some areas, both here and around the world, for registering property rights to land and putting that on the blockchain. So this is actually a big area. I think we'll see a lot more activity in PropTech. RegTech is another major um, vertical or silo. This is involved with ensuring transparent and audible financial systems. So in the United States, there are legal rules that require a financial institution to know their customers. This is KYC, to also prevent money laundering. And so imposes a responsibility on financial institutions to collect information um, on their customers and their transactions, and to be able to have digital audit trails or to have audit trails. And so companies like Comply Advantage provide software to these platforms. So imagine you're a neobank, so you're a online bank, and you still have to perform these services. You can use the services of Comply Advantage to provide this kind of regulatory requirements. And so we're seeing more and more of this where software companies will either help financial service firms satisfy regulatory requirements or reporting requirements to exchanges or to regulatory bodies. Um, um, I didn't put this down, but another area that's related to RegTech is the fact that the kinds of things that we're seeing in financial services or FinTech are flowing into what government services. So, if you will, you can call it GovTech. Think about tax services, think about charges and fees, on it goes. We're seeing these technologies increasingly being used by governmental entities. And so that's another large and growing area of kind of not exactly fintech, but using fintech technologies and government services. In terms of growth in the near term, this is just a rank ordering. different people are going to have different opinions on this. But right now, I think AI powered fintech is probably the biggest area of growth. And I think that should be clear to most of you. We're in the early pages. I've lived long enough to see several of these. At the early stages of the internet boom, you saw a lot of hype. At the first stages of blockchain, you saw a lot of hype. We're seeing the same kind of thing with AI. Things are going to settle down as we start trying to implement these. I'll come back to that point in a moment. Another area, big area, would go be embedded finance. That's big, not only in the United States, but in growing around the world. Stable coins and digital assets is kind of another big area. This is not just central bank digital currency, but it is also currencies supported or digital assets supported by fiat currencies, but also international payments. I'll come back to that. Real-time payments. Um, as you may know, in the United States, we've converted to FedNow, which is a real-time payment system. This is true in many countries as well. So the speed at which payments are occurring is growing faster and faster. And so businesses are having to adapt to this because it creates a whole new set of challenges. Because imagine in real-time payments, you don't you have to make decisions about fraud and much quicker. And so this creates its own set of problems. RegTech is another area that's evolving. As I mentioned, this is partly involving the application of financial technology to governmental entities. Open finance, we've already seen a lot of that. It'll continue to grow. This is like the neo banks and the neo insurance companies and the like. Wealth tech will continue to grow. It's already grown quite a bit, so its growth potential in the near term is probably less than some of these others. So this is kind of where I see growth in the areas we've just talked about over the next 5 years. Now, in terms of future issues, um, there's a whole bunch. This is not in order of importance. This is just kind of a listing. Tokenization of assets. We're seeing the rapid tokenization of, let's say, stocks. So New York Stock Exchange is tokenizing stock traded on the exchange. NASDAQ is doing the same. There's all kinds of ventures. So it's kind of interesting. So one of my former students called me the other day in that he was developing a company with some others to tokenize coal deposits in West Virginia, which quite sure how that's going to work. We had another woman who I met with 2 weeks ago. She's moved to a company here from Hong Kong. They're dealing with gold and tokenization of gold assets. So we're seeing kind of this characterization of an asset being associated with an electronic token. We're going to see more and more of that. Property is a good example as well. International payments. As I mentioned, this is an area I think it's going to go through a lot of evolution. It's right now, you may know, uh, be familiar with kind of the SWIFT system, which is a messaging system for facilitating transactions between major money center banks. Uh, Ripple has been touted as a possible cryptocurrency that can be used for this. I actually had a student from China who's been working on a startup that involves kind of converting domestic currencies to a cryptocurrency to affect payments between countries. As I mentioned, TDC is working with the Canton network. That's actually going to be pretty interesting because that's a permission blockchain which is allowing payments among major money sending banks. And so that is evolving quickly. JP Morgan's unrolling its own version. So we'll have to wait and see how some of these endeavors pan out. But that's probably the biggest area in payments. Um, as you no doubt know, Gen AI products have had a big splash. And uh, it's not clear how they're going to sort out. So there are companies that have laid off workers, claiming they're going to use these Gen AI products to perform the same work. One of my former students, who's from India actually, she's now a VP with Citi. She has credit assessment of commercial entities, so she does credit evaluations for Microsoft and large companies. She told me that she had a staff of about 15 analysts that reported to her who were fired on the notion that Citi was going to be able to substitute Gen AI products to perform the services they had been performing. But now Citi's coming back and realizing, oh, we've got to hire back some of these people because it's still the case that you have to have somebody that knows how to evaluate what you're getting from these products. No doubt you are familiar with stories about hallucination, but that's not only that, but you've got to know kind of where are they getting the information, um, how are they using it, how do we interpret, how do we use it. There's a lot of reasons, not to mention the design of the prompts. No doubt you've heard a lot about prompt design, which is important, but then it's also important to be able to evaluate the output of what you get from the prompt. And so we're still trying to struggle, at least in the States and around the world, with trying to figure out how these new technologies affect the design of work. And I would imagine we'll continue to see this. Kind of overlaying with this would be automation AI agents. So tonight I have a course on automation and um, 5 years ago, we taught mainly about robotic process agents, which were agents and software that follow defined rules. Now we're integrating Gen AI with these products as well as other types of technologies to allow these processes to show some judgment. We had somebody from Bank of America just a month, 2 months ago, talking about their endeavors to use these AI products for international payments. Uh, there's a problem, as you can no doubt understand. Um, these AI agents um, do not always show the judgment that is necessary. And so there's all kinds of issues with how much authority you give the agent. Just yesterday, for example, there was a discussion on a newsletter payments talking about the problems with AI agents using all the funds in the wallet to affect transactions, which then created a problem for the vendor because now they were out of money. So, there's all kinds of safeguards we still are trying to work out in terms of how these AI agents operate. And so this is going to be an evolving issue. It's also what is the legal authority of an AI agent to make a purchase or a lending decision. So there's legal issues, there's control issues, there's privacy and data governance. This is actually a big issue for a number of companies. I have a colleague or actually somebody who teaches in my program. She's actually from India also originally. She does data governance issues with AI, which many companies are now trying to focus on. Going back to AI products. So I have a student who works with IBM and another who's head of machine learning for JP Morgan. And both of them have talked to me about the fact that their companies are avoiding the use of these broad Gen AI products like Chat or Gemini, but actually now training more narrow focused. So the student at IBM, their project is just developing a LLM or Gen AI type product for just energy, oil and gas companies, for this one oil and gas company. So Citi has taken part of, if I understood it correctly, they had an arrangement with Chat GPT. They took part of early version of its LLM. Now they're training it internally. So we're seeing a lot more targeted use of AI. And part of that goes back to privacy and governance issues because the companies don't want to share their information as part of the training of these larger products. There's also legal issues with these larger products, as you may know. There have been lawsuits against Apple and others by New York Times and other companies claiming their data has been used in the training of these products without compensation. So we're going to see a lot more um, discussion over the question of data governance with AI products and how that's regulated. And then finally, quantum computing. Now, quantum computing is a hot topic now. So, one of the people who teaches in my program actually was involved in the quantum program for NTT Data. So things have moved rapidly in this space. Uh, how things sort out is not clear. I mean, one of the concerns you may be familiar with is whether quantum computing is going to break the cryptographic protection of cryptocurrencies or blockchains. This is kind of a hotly debated issue. Um, there was a paper just yesterday I saw from a physicist at Drexel, I think it was, talking about how the issue really is the cost. It's not so much the technology, but how much it costs to do this. So there's a lot of discussion about that and how quantum computing will be used. So we've had at least 3 or 4 sessions on effective quantum computing on trading and risk assessment here at the university. So this is an area that's evolving quickly. The technology is changing. For example, one company that we've worked with a little bit, what they have been working on is developing a language which is more like you would typically use, like let's say like Python, as a front end to another language that would actually communicate with the quantum computer. So that's because quantum computing requires a whole different way of thinking about programming. And so That's one of the many issues that are now being addressed. Um, we're already seeing some applications. Again, there are some New York companies that are trying to develop quantum computing for trading. It's still in the early stages. So we'll see a lot more of this. But the biggest impact is going to be on how we cryptographically encode information because you know everything you do on the internet, you have HTTPS, which is an encrypted transfer of information between platforms. You're, we're going to see emails. A lot of things on the internet are going to have to change because of the need to change how we cryptographically encode these messages. Okay, so that's all I have to say about the topic. Hopefully, you have questions. I'll open up for questions.
Thank you, Professor Kishnik, for that wonderful map of the state of play, the areas of, advancement in the field, and for that forecast into the future of what the field looks like as well. Students, this is a great time to bring your questions in, and have them answered by someone who knows the field firsthand. There are a few questions already coming privately into my chat box. I'm going to address them in the order in which they came in. Oh, well, not address them, but pose them to Professor Kishnik. So, Professor, the first one is, are there new innovations in bank and FinTech audit and compliance?
Okay. Well, as I mentioned, neobanks are a good example of an innovation. There are a lot of banks now. So um, I just had a discussion yesterday with one of my colleagues about the Clarity Act, which is a legal piece of legislation that will define the rules for cryptocurrency platforms and banks. What we're likely to see is some of these crypto platforms then applying for a bank license. And so this would be an example of a neobank, but a neobank on a blockchain. So that's something that I think we'll see. Now, compliance, as I said, they will fall in the US and in most countries under the same rules about know your customer, anti-laundering. So they're going to have to perform those services. And the likelihood is they'll turn to some of these fintechs that are developing strategies for providing that kind of certification.
All right, thank you. Moving on to the next question. Professor, this is a bit of a long one and might be a bit case specific, so feel free to answer what is appropriate and leave what is not. So I'll just read it out. The background is this person is a founder of a B2B
Agreement.
SaaS fintech platform, um, providing embedded lending CRM workflows for microfinance banks,
Hmm.
small finance banks, NBFCs, DSA networks. And currently, his software is used by two NBFCs, and he has two specific questions. The first is about overcoming age and trust deficits. So, during product pitches, he says that veteran bankers love the software but object to his credibility because he's a young 20-year-old undergrad. So from a fintech strategy perspective, how do young founders structure institutional trust, compliance guarantees, or advisory boards to close legacy enterprise clients? Should I give you the second question as well, or stop at this and
Let
then?
me first
Okay.
address this. This is a big problem. Okay, so I have students that have startups, right? And so the problem is convincing. Now, uh, Lending Hut is an example of a company. What they did is they got financing from a well-heeled investor that had contacts with different financial institutions. So that's one way to try and bring in an investor who has those contacts. Okay. Another strategy is to actually get somebody who has that. So I have a good friend, Gautam Sikar, who is senior vice president of a large FinTech company that provides services to many banks and credit unions. And so he's works with a number of startups, and because he's known, that helps sell their services. So the point is, you might try and buy the credibility of somebody who's more experienced by bringing them on board. I hear your problem. It's a problem, period. You know, I hate to say it's older people want to see some gray hair before you trust. Have you been around the bend, so to speak? And so uh, those are two strategies that I've seen used to address this problem.
Thanks, Professor. The second question from the same participant is on a B2B lending pricing architecture. He says, so he's given some exact rates, but I'm just asking the question more generally. He says, for my first two clients, I'm charging a flat per branch model. As I scale, which pricing strategy is proven best for my embedded lending SaaS? Flat per branch pricing per user seat pricing, or a take rate stroke royalty on volume, or a tiered usage model. Let me know if you want the specifics of the rates.
Oh, wow. Um, Unfortunately, that's one of those questions where there's no one answer that fits all cases because it depends on who you're working with. I've seen all those variations, and I'm not sure any one is dominated in the marketplace. Um, I guess this is not to evade the question, but uh, I would suggest they pay attention to who are the customers they're selling this to and what are they willing to pay? Uh, because, it may be you charge on a transaction basis rather than, or maybe a tier basis. That be another way to deal with the volume. Clearly, you want to do something to recognize the volume of transactions and the cost difference or the pricing difference. So whether you do tiered or do it some other way, um, that will depend on kind of who you're selling your services to. I don't mean to avoid the question. I just don't have a easy answer for it because I've seen all those, and I don't see any one of them surviving or not surviving the marketplace.
Thank you, Professor. The next one is from a student who is interested in the educational pathway. So, for someone with an engineering plus finance background, in this case, a BTech in mechatronics and an MSc in finance, are there PhD programs at the intersection of AI, risk, and quantitative finance that you'd recommend, or any specific faculty or programs? Of course, you can answer this broadly. You can also talk about your institution and the options then.
Hmm. Well, this is going to sound like a cheap answer, but the best school you can get into because there's probably no PhD program that's credible. Now, notice I added the modifier credible. Um, all the major PhD programs that I am familiar with have the ability to provide training in the areas you're talking about. Now, some may be better at it than others. And sometimes there's schools you don't even think about, like Stevens has got probably a really good tech finance program. But they do more data engineering or financial engineering overlapping with FinTech. Um, but NYU's good. I mean, there are a lot of good schools. UT Austin, the school I went to, has a great program. We have a good program, but you know, uh, I would submit something that PhD students. So we get PhD students. Like our program gets probably 200, 250 applications, and we admit maybe four or five. And so that's going to be true with any large major program. So you need to apply to a range of programs. Kind of the ones you would love to get into, down to the ones you think you have a high probability of getting into, because it's a crap shot in some sense, because there's so many good students applying for these programs. But once you get in a program, the real issue is you. And by that, I mean your PhD program is actually the first part of your career, and you should be investing as much as you can in yourself and what you are doing. And you have to decide what you're interested in. Um, and start investing in that area. I've seen too many PhD students come to a program not really having any sense of direction, and they just kind of flounder. So you need to have some sense of what is it you find interesting and start working on it now, because at the end of the day, finance is um, it's what can you do, right? You could have gone to a third tier school, but if you can do things that people think, oh my God, that's really great, you will be rewarded for that. And so that's really the important thing. Focus on kind of what you're interested in. See if you look at the journals, see who's publishing in areas you're interested in, and make that kind of one of your guides to deciding what kind of school you want to go to. I mean, you can easily go to www.ssrn.com, search under the topics you're interested in and see who's publishing in those areas, who's doing research. Then those are the people you want to reach out to, and you want to start focusing on that. But at the end of the day, you know, being an academic, you're an independent actor. People don't understand this sometimes, but you're like your own business. And so you need to be investing in your capabilities and what you can do. Okay.
Thanks, Professor. There are three more questions. Do you have
Sure.
time to take them all, or do you want me to select one or two?
No, keep on.
Keep on. All right, great. Thank you. So the next question is, since you mentioned that companies avoid Gen AI products, for a a B Tech student, what would you recommend uh, in terms of how a student would learn things and stay in the IT industry? It's a bit of a broad question. I'm not sure we
No,
are
that's fine.
addressing
But
it.
let me first correct that impression. Companies aren't avoiding AI products. They're using them, but they're evolving in their understanding of their uses, right? So it's like in a new technology. People are all excited at first, they start using it, and then they see the pros and cons. I'll give an example. So I had a conversation last week with the head of AI for FIS, which is a major financial services consulting firm. And he was talking about what they're seeing with their clients is, and I've seen this play over and over again, is they will go all in into Gen AI, and they'll spend a lot of tokens to use these products. And then they realize, oh my God, we've spent all this money. Right. This wasn't very cost effective. And so now they're pulling back. This is why you're beginning to see, for example, the Chinese and other countries are starting to move in terms of cheaper Gen AI products in order to lower the token cost. And you've seen Chat and Gemini and other platforms reducing their token cost. In fact, they're giving discounts now to try and promote their use. So companies were all in to start, but then they started realizing the cost of using these. And then they said, oh, we need to be more careful. But then it's also they were evaluating, oh, we cut these jobs, but actually we need some human in the loop. And so we're in a process of kind of sorting that out. Now, in terms of a student, I would be using Gen AI products. So, for example, I teach a capstone course for undergrads. Um, and I have them do a series of projects. So one of the things that I've been having them do increasingly is use a Gen AI product and prompts to help them develop their reports. So they're doing a competitive analysis, how to build a forecasted financial statement, how to do valuation, how to do credit assessment. But the point is, at the end of the day, they can use these products, but they have to be able to explain what the results were, where the data come from, and why the results are what they are. So they'll help you reduce, you do these tasks, but if you're not involved with being able to understand, then that's a problem. And so one of the things I'm seeing is we started out, so my program is a FinTech program. We used to put more emphasis on the tech part. Now we're changing and we're putting uh, equal emphasis on the finance part. Because at the end of the day, using technology isn't as much of a problem as it was. What's more of the problem is being able to use the technology intelligently to solve financial problems.
Sounds good. I think this covers a couple of other questions regarding AI as well, so I will leave those for now. I will go to the next question. Yes, if you were starting your career in fintech today, which technical and business skills would you prioritize over the next 3 years and why?
Uh, well, my particular favorite is either math and finance or computer science and finance, but not just a single degree, because it's really a combination of the two. Math is throughout finance and fintech. So that's not going to change. Machine learning, obviously, but deep learning, all these, understanding the math behind these technologies is often very important in understanding their pros and cons. Um, but computer skills, information technology, and finance, it's really a combination. So fintech is a combination of the two. It's a combination of information technology and finance. Now, it may be that in the 5 years ago, might have put more emphasis on the IT and less on the finance. I think that's changed. I think it's now at least 50-50 or maybe even more on the finance and 40 on the tech. But certainly you have to understand information technology. Um, if you can't, it's kind of like I was talking to a colleague of mine yesterday. So I do a blockchain course in the fall, and what I've observed, there's two kinds of people in this sphere. There's people who talk about blockchain and people who can build a blockchain. And you want to be able to at least understand how to build one, not because you will build one, but so you understand kind of the strengths and weaknesses. because one of the things that's happening now is there's been so much attention on smart contracts and like there's now people who are attacking these in all kinds of ways we didn't imagine. And so understanding these at a basic level is important to understanding security issues.
Noted. Thank you. Related to this, I'm not sure if you've already answered this essentially in this last answer, but there is a student who is a just graduated MBA finance student, and she wants to know if you had to advise an MBA finance student who's starting from scratch in FinTech today, what
Mhm.
are the key skill certifications and experiences to prioritize to grow in the FinTech field? If you feel you've already answered this, that's fine. But if you have anything to add, then you go do that.
Yeah, I guess if you have an MBA in finance, so you have a good finance background, you're lacking the IT background. And so that's what I'd focus on is improving your IT background, knowing basic computer science, network technology, particularly data structures and data engineering. So right now for my students, I'm putting more emphasis on data engineering as a kind of skill set they need to have in addition to finance because you need that to be able to work with data and data systems. But clearly blockchain, if you're going to really know blockchain, you need to know basic computer science concepts and cryptographic skills. So that would be what I'd focus on, improving your IT background.
Sounds good. Thank you so much, Professor. With that, we will draw this webinar to a close. Thank you once again for an amazing, sort of map of the field, for, I think, a lot of depth of information with clarity as well for those who are new to the topic. So that was really good. And for really patiently wading through all the questions that I posed to you on behalf of our students.
Okay.
Thank you, participants, for attending, for spending your evening with us. Um, there's some useful contact information on the slide, both for the Naveen Jindal School of Management, a link to the program in FinTech that the professor directs.
Oh,
And
actually, let me
yeah,
just correct
go
one
for
thing.
it.
The email address is now FinTech
Oh, I see.
at
Okay.
UT Dallas.
Okay. So please note that the email address is fintech@utdallas.edu.
They can go to the website and get it.
Yeah. All right. And
Okay, thank you.
thank you. And there's EduSA India contact information as well. You're welcome to reach out to us. Thank you, everyone. Thank you, Professor Kishnik, once again. Have a good day. Have a good evening wherever you are. And all the best with your journeys ahead.
Bye-bye.